Hello, Wolfpack. Welcome to the technical analysis explanation series. I'm not actually sure what I'm going to call it yet, but I think I'm going to call it something like that. In which I explain technical indicators, in which I explain everything to do with technical analysis. Because I know a lot of people, actually most people who watch my channel, I'm assuming most people, maybe 50%, would have gotten to crypto maybe this year. 2021, maybe 2020. And so naturally, the shorter amount of time you've been in crypto, most likely the less you know about technical analysis, and technical analysis is actually a really important part of cryptocurrency, especially when it comes to bull markets and bear markets, right? So you could say, oh well, that's every market, but not particularly, right? At bull markets, you need to know when the market's going to top out. You need to know when we're going to correct, because you're going to lose and make a lot of money in a bull market. And for a bear market, you need to know whether the TA becomes obsolete, right? If Bitcoin breaks its 4-year cycle theory and continues downwards for 10 years, that might be the end of Bitcoin. So you need to know at least the basics, right? At least the basics. And that's why I'm starting off with the basics, right? So this is a very simple video. If you know much about TA, you don't really need to watch this video if you don't want to. But what I'm essentially going to be explaining in this video is how to identify support and resistance, because I think that's a place where every single trader or investor, investing is just you need to know this just as much as you do in trading. Need to identify. You need to know how to identify and what they do, support and resistance zones. Now, what I'm getting at in this video and why I'm explaining this to you is because support and resistance zones, even if you're not a big trader, you need to know where to buy and you need to know where to sell, right? Usually when we come up on support, or come down on support, you need to be buying. All right, and when we come up on resistance, you need to be selling, right? That's how it should go on paper. Obviously, that's not how it works 100% of the time. And if your resistance zone is only 1% above your support zone, then that's obviously a different story. But in terms of a longer term scale, that's what you want to be looking to doing, right? Selling at resistance and buying at support, because naturally the price is going to bounce between resistance and support, right? Let's look at some examples of support and resistance. Now, before I actually look at examples, I want to get into the fact, what is support and what is resistance? Well, the way I see it is that support and resistance are psychological areas of interest in people's minds in which they see it as good to buy and good to sell based off historical price action, right? Please note that everything in charting is literally just a map of human psychology, or a history book of human psychology that seems to be playing out over and over and over again. And since that is a reoccurring pattern, people are looking at specific price points for areas of buying and areas of selling. So an example of support. Well, first off, there's two types of support, right? There's two types of support. All right, we got one, which is static support, right, and resistance, obviously. So, sorry, I've just got my microphone in front of my keyboard here, so I can't really see what I'm typing. Let's see, resistance. Alright, typing blind. Static support and resistance, and then we've got number two, which is dynamic, right? Dynamic support, and resistance. So the difference between these two things is static support and resistance is a zone in which that, it's at a specific price point or a range of price points in which never changes, right? That's the support zone. So, for example, an example of static support would be, for example, let's look at here, right? So between 30,000 and around 29,000 that we saw for the entirety of this year, right? We're constantly bouncing off of that region. And the reason why we're doing this, right, is because, keep in mind, we're coming up above it, we're coming down. People are seeing that, hey, historically, this region is good for bounces, right? We've historically bounced off this region. It's not very often that we drop below it, and so this might be a good buying range because you're maximizing your upside potential. People see that on a mass scale, and it leads to massive increases in price. What is an increase in price? An increase in price is essentially, what's happening is that, well, the chart is reflecting a shift in sentiment in the market from majority of people selling to majority of people buying. In order for the price to move up, there needs to be more buyers than sellers, or there needs to be more buying volume than selling volume, right? So in terms of total transactions, say if, the whole Bitcoin transaction for today was, every transaction in Bitcoin for today equated to $2 of buying and $1 of selling, well, Bitcoin would go up, right? It'd go up slightly, right? Let's say $2 billion of buying and $1 billion of selling. It'd go up drastically, right? So, it's all about the bulls, which is the buyers, or the bears, which is the sellers, having a little fight, and essentially whoever comes out on top reflects in the price. So, for example, in May, we saw a massive drop down. The bulls essentially got sick of buying as the price wasn't doing too much, regardless of all of their efforts. And when we saw a little drop, we saw a chain reaction in which people said, oh, maybe this is the end, right? We haven't been able to push past those resistance zones, so, we're giving up. And we saw a chain reaction, and then that chain reaction of panic selling went on and triggered all of the stop losses, and it just kind of kept snowballing for multiple days until we reached a bottom here in 29K, which is where we found support back here in December and January. When people saw that, hey, this is the support zone we found in December and January, they started buying in this region, and hence we didn't drop below here. And then what happened was, the bears tried to push it down for a long time, and then they realized, hey, we're not going to get it below 29K, and then the sentiment flipped over, the bears started buying, and the bulls gained control, and we went upwards, right? It's all about battling between the bulls and the bears. That's all this market is, a battle between the bulls and the bears. But in order to understand that battle, in order to take advantage of that battle, you need to understand where your support and resistance zones are. So how do you identify support and resistance zones? Well, just what I've done right there. It takes practice, obviously. But what I've done right there is I've understood that, hey, in this region between 30K and 29K, we very, often bounce, right? We come down and we bounce off that region. We come down and we bounce off that region. It's happened, 2 times on a larger scale, but like dozens of times on a smaller scale, right? There's multiple other regions of that, right? We have a region here, right? All you need to do is look at the chart, draw horizontal lines. We have a region here around 43K, right? What did? We came down, we bounced off of that region. We came down, we bounced off of that region, right? It's happened multiple times, and there's multiple, there's literally probably 100 support and resistance zones on this chart. But the point is, some of them are stronger than others. So this zone here at 29K to 30K would probably be one of the strongest support zones we have on this chart. The lower we go, the stronger those support zones get. And the more tested they are, the more tried and true they are, naturally, the more people know about them, and hence the more people are likely to buy in that region, and hence the more likely that support zone is going to hold. The same thing with resistance, right? So it is fundamental to know what these are. That's static support. So static support, which is number one that we just talked about, is support zones and resistance zones that hold in one place forever, right? Dynamic support and resistance are moving averages. So essentially what a moving average is, this yellow and red line here, they come in all different colors and shapes, but we have the 12 SMA and the 100 SMA. So what these things do, and it depends what chart you're on. I'm on the daily chart right now. So for the 100 SMA, which is the red line, what that is, it is a calculation that is constantly recalculating of the average price of Bitcoin for the last 100 days, and it's giving you that average price in form of a line. So historically, we can see that on January 23rd, the average price of Bitcoin for the last 100 days from that point was 21,000, right? Right now, it's at 49,000. And these areas also act as support and resistance zones. For example, we can see that here in April, we bounced off of the 100 SMA, right? Here in September, we did the same thing. We bounced off of the 100 SMA. Now, obviously, the bigger the number, the 100 SMA versus the 12 SMA, the more likely you're going to see a bounce off of that zone, and the more of a longer term support zone it's going to be. So if we look at the 12 SMA, which is the yellow line, and let's actually remove these two circles, we can see this is a shorter term support zone because it's only taking into account the last 12 days, and so it's going to be more up to date with current price action. We can see this offers short term support, right? Multiple regions in this, we've bounced off this in the short term. I'm just circling a bunch of them right now. We've bounced off of it in the short term. And there's also multiple times it's acted as resistance in the short term as well. So right now, what's happened on Bitcoin, what we can see on Bitcoin is, and we'll zoom up here, we've actually moved below the 100 SMA. So that means we're trading at prices that are less than the last 12 days on average, and it's acting as resistance. So it's staying below it and it's pushing us downwards. And as it angles downwards, the more, that means the price is going downwards essentially. So, you have very fundamental ones, like the 12 SMA isn't necessarily too important, but the 100 SMA, for example, and we'll bring up another one right now. Actually, let's bring up, for example, the bull market support band, which is the 21-week SMA and the 21-week EMA, right? So the red line is the 20-week SMA, and the green line is the 21-week EMA. We can see that, wow, look how strongly we bounced off the 20-week SMA in that region, right? This is because historically, this 20-week SMA has proven to be a great bouncing zone. And so, people looking at the charts, which are the big money, because you have to understand that, 99% of people who have massive amounts of money in the market, who basically control the market, are constantly looking for trends, right? And they'd understand that, hey, the 20-week SMA is a very decent support zone. And so when it came down to the 20-week SMA in September, they all bought. And it didn't matter what the small players did who don't look at the charts, because they all bought. It caused a chain reaction of greed, and hence everyone bought, and it went upwards, right? So, you might think that, well, why do people care about these lines? Why do these lines have any effect on people? That shouldn't matter, right? Well, it does, because this is what the big smart money is doing, and you have to want to copy what the smart money is doing to make money, right? If, for example, if, Michael Saylor is looking at a chart and he's looking when MicroStrategy is going to buy the next bag of Bitcoin, he's going to be looking at fundamental support zones, whether they are static or dynamic, right? If they're dynamic, he probably came down here in September. He saw it reach the 20-week SMA. He looked at the charts. He looked at the history. He said, it's probably very unlikely we're going to drop below this region. And he probably bought here. And because he bought here, well, then the news spreads. Michael Saylor bought Bitcoin. And then heaps of people buy Bitcoin. They're feeding into the hype and it goes up, right? So even if you don't believe in TA, you're still feeding into the TA, right? You're still part of the statistics. So, that's it. That's support and resistance zones. I hope you enjoyed. There's my friend Mega Whale down the bottom there. I hope you enjoyed, and I'll catch you in the next one.